Good morning, everyone. And I'm Navin Lala from Old Mutual Alternative Investments. And by alternative investments, we do private market investments, so all of those investments that are unlisted assets. So I think that gives you a sort of idea of where we're going to in terms of what if the best returns aren't available in the listed markets. So I think before we get into that, I just wanted to just start off with a few introductions. So on my left, I've got Mervyn Naidu from Actum. And maybe Mervyn, he's the CEO. Perhaps you can just give us a quick introduction about Actum, your company, and yourself, and then we move over to Chumani, Vuyo, and Anton.
Good morning, Naveen, fellow panelists and guests. So my name is Mervyn Naidu. I'm the group CEO of a company called Actom. So Actom is a company that employs approximately 8,500 people in 5 countries. And we're the largest manufacturer and aftermarket services provider in sub-Saharan Africa in our field. And we manufacture electrical equipment like transformers, switchgear, boilers, and a whole range of other products, and do the aftermarket support as well, with Old Mutual being our majority shareholder.
Wonderful, thank you.
Hi everyone, my name is Manikula. I co-head Old Mutual Private Equity. We've been investing in private equity for 25 years now. And over the years, we've invested 12 billion rands in terms of, into private companies. We've currently today, we manage 12 billion in terms of AUM. We've done 38 transactions and 27 exits. Been involved in quite big situations when it comes to private equity in South Africa. Typical landmark transaction would have been the delisting of Console and Long for Life a couple of years ago. And obviously our partners here with Actom, both in 2008 and in 2021. We're very active. We're currently currently raising our Fund 6 off the back of a very strong Fund 5 track record. I'm very excited to be here. I think this is the right topic, and thank you.
Cool, thanks Chumani. Vuyo?
Okay, thanks Nav. My name is Vuyo Ntoi, and I'm the co-managing director of a business called AIM, or African Infrastructure Investment Managers. We're a private equity infrastructure management business within the Old Mutual Alternative Investments group. We are a pan-African business. We manage $3 billion all in all. And that largely rests on 2 legs. We have a dollar-denominated business which raises dollar capital to invest in infrastructure projects across the continent. And the latest fund in the series of funds we raise in that regard is the $750 million A4 fund. The other leg, which is probably more relevant to the audience here, is a South African business, and we have a permanent capital vehicle called the Ideas Fund, which is probably the oldest and largest dedicated private markets investor in South African infrastructure. It's a 30 billion rand fund that's been around for the last 25 years and has invested across the infrastructure sectors through its life. So thanks for that.
Superb, thanks Vuyo. And yourself, Anton?
Morning. Good morning, everybody. Thanks, Naveen. Thanks for the intro. So my name is Anton Potgieter. I head up the logistics group. The logistics group is made out of 12 subsidiaries, which we fully own. The group is active in ports and rail and transport on all the main corridors in sub-Saharan Africa. So we've got a footprint from Dar es Salaam in every single port all the way around to Walvis Bay. In the group, we are the largest privately owned logistics group in Southern Africa by a long mile. Thanks.
Thank you. So just coming back to our theme of, what if the best returns on in the market? just to give you a sense of it, globally, there are about 10,000 listed companies on stock markets around the world with revenues in excess of $100 million. In the private space, there are 80,000 unlisted companies with revenues in excess of $100 million. So what that tells you is that the opportunity set in the private unlisted world is phenomenal. It's 8 to 9 times larger than what you'd get in the listed market. And on the backdrop of that, in the South African context, you've got a shrinking universe where the JSE's dwindled to, I think it's about 270 stocks at the moment, where beyond the top, call it 60, liquidity's pretty scant. So you find that your normal listed managers aren't able to actually participate in or invest in companies that are harnessing revenues from the opportunities available in South Africa Inc. And I think we hear the headlines can be confusing because you hear about GDP growth being quite anemic. But if you think about GDP growth, it's about the aggregate of where growth is. There are lots of sectors and companies that are performing well ahead of GDP and some that are doing quite poorly. So in the unlisted space, there are opportunities specifically in, I think, Fredel Haffergy gave a talk last night in Nhlanhla, and they spoke about this super cycle of infrastructure build in South Africa, where those assets, to participate in that opportunity, you can't access companies in the listed market, where we've got both Actom and the logistics group that participate in those opportunities, where you wouldn't be able to access that in the market. So I thought, we know that there's these 85,000 companies globally, and these two organizations, Actom and Logistics Group, would fit in that category. So I think we're very fortunate today to have the actual CEOs and operators of these businesses that can talk to you more about this, how their business are performing within this environment. So I think maybe starting with you, Chumani, it's about these companies that some companies a lot of folk may not have heard of that we have in our portfolios that are sizable companies. Have you touch on how do you go about finding these and what do you look for and what attracted you to Actom?
Yeah, I think the secret is that the best returns are actually, as a matter of fact, in the unlisted market, not in the. That's the big secret.
Yeah.
And both Vuyo and myself, from an infra perspective and from a private equity perspective, over 25 years, we've demonstrated that our returns have significantly outperformed the listed market. The question is why. The question is why. And I think if I have to sum it up, Nevin, it's certainly from a private equity perspective, there is just perfect alignment between us as a shareholder and management. And when I say perfect alignment, it's in different aspects. I think the first one is, we create that perfect alignment by making sure that our management teams are significantly invested in the business. We, in turn, are able to even, sweeten that further, that they actually have a significance. Like, these are obviously big businesses, but we want it to be very material from a management's perspective. What that drives, Nevin, is a strong ownership mindset. The guys stop thinking like employees and they start thinking like an owner. To think like an owner, it means you're thinking about the business from a long-term value creation. In the market, obviously, in the public market, there isn't necessarily perfect alignment. There's this strong focus on short-term profits. Every quarter, you've got to chase these profits. In private equity, there's none of that. You're able to focus on the long-term value creation. The decision-making is very swift, and that's because we ourselves are on the board. We craft the strategy together. We're on the board. If there's an opportunity that comes up, whether it's an acquisition, whether we're going to a new market in Kenya or whatever, Mervyn calls the board, we get together and we move. And I think that's so a strong entrepreneurial culture, a long-term value creation focused, ownership mindset, and the guys are waking up every day thinking how to grow the business. So maybe growth orientation is a big theme that comes with that. Let me maybe pause there for now, Mervyn.
Thanks, Chumani.
Mervyn,
I think, Mervyn, maybe asking you the other side of the coin.
Yeah.
What attracted you to Old Mutual Private Equity?
Yeah.
And your experience and the value add.
Yeah. Okay, so Naveen, the business that I manage, our revenue is approximately 13 billion rands per annum. As I said, employ about 8,500 people. So it's a very complex business, 122 years old this year. And so my journey with Old Mutual started 20 years ago. So I'm an electrical engineer by profession. 20 years ago, I knew nothing about private equity. Okay. So, and we were part of a listed company at that time. So I was a part of the management team that did a buyout alongside private equity shareholders. And I must say, so coming out of that listed environment to the private equity space, I got to see things, the modus operandi on both sides. And what appealed to me about the private equity model, so I've been through it in different forms over the past 20 years, is the fact that the management team is fully empowered. On the one hand, as Chumani said, and when you look at bureaucracy in terms of reporting, that those quarterly, the quarterly targets and that, it's very different. We're fully empowered, and at the end of the day, when you look at the likes of Actom compared to our competitors being in the listed space or even multinational trade companies that are internationally listed in that, the difference with us is that we can very quickly change, and adapt the business to market conditions. In terms of diversification from a product or services perspective, in terms of entering new markets and that. And that's what's given us that ability to adapt quickly and in manifest opportunities. So if we see opportunities, we move quickly because our shareholders are on the board, and ultimately we all aligned. So it's very much entrepreneurial. The culture is entrepreneurial. The other important factor as well with the private equity model is that of retention. When you look at skills, as we all know, skills are scarce in technical sectors generally, and we as Actom have managed to retain core skills. So this model, it's one of ownership as opposed to an employee relationship, is a very dynamic one that leads to entrepreneurship and long-term growth initiatives.
Thanks. I think it goes without saying that versus the corporate world, what makes entrepreneurial businesses achieve their results is that just this obsession to stick to strategy and to make sure that every day you're getting closer and closer to executing that.
Yeah.
So now that Actom and the logistics groups are both playing a critical role in our country, where we know that there's certain market failures that we have, notably the two big ones being the one Eskom, where Actom supplies lots of electrical components and parts that without it, Eskom wouldn't be able to operate as efficiently or inefficiently as it has. And I think with that, Logistics Group does the same thing. It's found this opportunity, or it fills this void where Transnet is failing. And I think with that, just Vuya, maybe just to pass on to you, is about really this infrastructure opportunity, how you found the theme, or identified this theme, and the opportunity in logistics.
Okay, thanks for that. I think, when we go about thinking of our business and where the opportunity sets will sit in the medium to long term, we look at what's happening globally, right? So globally, there's a couple of macro themes that are driving kind of the development of infrastructure broadly. So the likes of the digital revolution. So at the moment, you're seeing data demand growing at a clip north of 40%, for instance, in most countries. It means that the demand for data centers, fiber, and other digital infrastructure is increasing at a clip which is much higher than GDP growth. Similarly, on the energy transition front, and I know there have been recent challenges to the proliferation of the transition, but the transition has got to a point where it actually makes economic sense. Rather, it's not a let's call it a. It doesn't come from a need to necessarily be green. It's the commercial choice because it's cheaper and is getting more and more reliable from a commercial perspective. So there's a big macro theme there. And especially on the continent where you're actually making up for shortfalls. So in many parts of the continent, there's generation shortfalls. So when you're building out that power, you're not limited by GDP from a demand perspective. You're replacing kind of obsolete and expensive means of energy generation. So you can grow those businesses much faster than GDP as well. And the last theme, which is more related to how we came to invest in the logistics group, which is the growing theme of urbanization. There's kind of, obviously, in Africa, we're seeing kind of rural populations move to the cities, strangling many cities from an infrastructure delivery perspective. And there's a big impetus to provide services to those communities that are moving to cities. So as a result, we've noted that there are infrastructure opportunities that arise from it, food security issues, which is why, for instance, we've invested quite heavily in the cold chain. There's the need for the transportation of goods, both from an export perspective and from a kind of urban to city supply perspective, and this is the area where the logistics group plays a role. So I think those are the global macro themes that we're investing against. South Africa has kind of overlain on that a sad theme, which is the theme you mentioned earlier of government failure. In a sense, the likes of Transnet and Eskom and other SOEs failing mean that there's an opportunity for the private sector to step up and step in and help to provide those solutions. And again, sadly, because of the nature of the opportunity, they aren't a function of GDP. You're actually replacing things where things are broken, so you can grow your businesses at a rate that's much higher than the GDP growth rate.
Thanks. Thanks, Vuyo. I mean, with that, there's, talking about this, globally, we're in this infrastructure super cycle. So with this market failures, investors have the opportunity to invest in, participate in, I think, above average market returns, and to play an important role in developing South Africa and getting South Africa to work. So, globally, I think the global population is about 8 billion people, and I think by 20 years it's expected to get to 9 billion. So that's an extra billion people. You need a lot more power, you need a lot more water, you need to produce more goods and services for these extra billion people. And with that, you need to be able to transport and get these goods to the consumers and also to the manufacturers. So that's a critical role that the logistics group plays within South Africa. So I think I've got two questions for you, Anton. The first one is just to tell us about the environment, the hole you're plugging, and the opportunities you're seeing. And I think after the following question, it's you came out of a listed entity. And just to get your view about being listed versus unlisted, and have you had the choice, with the benefit of hindsight, what you would have chosen with a blank canvas, to be listed or unlisted?
Yeah, I'm in the fortunate position, probably, to have been in a listed environment. We belong to the PSG group, where we were one of their subsidiaries via their Zeda Agri Fund. And I must say, just to testify to that, is that Vuyu bought us about 4 years ago now, out of a listed entity, where obviously there was access to capital, but with a lot of red tape. And unfortunately, it's also you don't move as fast as you would like to move. Logistics is about moving cargo. It's a 24/7, 365 business. We move 1 million tons per month, and to do that, you need to be agile. And in a listed environment, there's always red tape, and we can't make a decision here. If we can quickly call a board here, and we can make a decision, and I can deploy that. But in an enlisted environment, it always needs to go upstairs. And the turnaround time, sometimes you've missed the opportunity, because what we do is not rocket science. So the competition there's a lot of competition, and if you don't move agile and swiftly, somebody else will fill the gap. So it's been a really good journey for us. They treat us as owners, and we manage it on an entrepreneurial basis, and we reward it as such. Where previously it was that structure was not there in a well-known listed environment, which also had good returns. But since then, access to capital is easier. The governance is there, but the red tape is cut. And through that, we can take on bigger projects. Since the past 4 years, we've grown into by far the largest private logistics group in Southern Africa, while before that, it was almost organic growth with backup funding through the listed parent, while now we can participate in all these RFIs and RFPs that Department of Transport is now bringing out. Then you're looking at, say, there's a 10 billion rand project down in Kuga. We can participate in that. If you're in a listed environment, my shareholder, their market cap's not even 10 billion, but now I'm chasing a 10 billion, project. So it's been a really good journey for us, and we've shown that bottom line. At the end of the day, you must go look at the bottom line, and that talks to that story. Coming back to the opportunities that I see is extremely, if you're in the logistics space, it's the most opportunity ever in Southern Africa. So unfortunately, something needs to break before you can step in and fill the void. We are actually a mirror. Transnet is a mirror of Eskom, and they unfortunately falling off a cliff. Their debt repayment is about 1 billion a month. So to give you an indication of what that means to us is 10, 12 years ago, Transnet transported by rail 250 million tons by rail. They'll battle to do 140 million tons this year. So that's 110 million tons that's sitting outside that can't get through ports. It can't be efficient. Rail is still 30% cheaper than road haul. So if you operate in Southern Africa, our advantage, also speaks to Mervyn, is yes, we're not in a growing economy, but the products that we transport is sustainable and it's growing. So we're in battery minerals, it's copper, manganese. We're also in world products which got a big demand, like citrus. South Africa's the second largest citrus exporter in the world. We handle 30% of all that citrus through our terminals. We're already a platform that now can pivot from where we're sitting. We've been in logistics for 30 years, so now we can pivot from the existing platform into what's opening up. So Transnet is putting through Department of Transport. That was a very good move that Transnet now sits, not an SOE, but is part of DOT now. So DOT is launching, I don't know if you're following it, but they've probably launched about 100 billion rands worth of RFIs in the past 3 months. It's massive opportunities where we can now actually start. We've got private rail that we're operating in Mozambique, but now suddenly in this year there will be private trains running in South Africa. South Africa sits with the 8th largest rail network in the world, 23,000 kilometers, only 7,000 kilometers being utilized. So now you're looking at 110 million tons that's looking for demand. And we can supply that, but you need capital. It's expensive. One train will cost you 200 million. So you need a lot of capital to fill the void, but that also creates a moat. And that's through this RFI process, we're now participating in that because we've got a strong capital partner that believes in infrastructure. But so transport and logistics suddenly has become an infrastructure play. You need to refurbish the railway line. You need to buy long-term assets in rail. The ports, you need refurbishment. We're inside of the ports. The ports are opening up because Transnet can't supply the demand. The demand far exceeds. They've done the numbers. So we losing 1 billion rand per day because the goods can't get out of the country. We still the large. South Africa is more or less, arguably, got the same resources as Australia, but they export 4 times more than us because they've got efficient infrastructure and logistics network. And that's where we can get to, but that opportunity is right here today. And this RFIs, RFPs will all come out in the next 3-4 years because Transnet is broken and we can fix it.
Thanks, Anton.
Sorry, Nav, just to Anton's being very modest around the bottom line, and maybe just speaking to the theme. For instance, Anton's grown his bottom line or EBITDA 2 times since we invested in him. And as a result of that, we were able to completely recapitalize the business, and within 3 years, able to repay our initial investment in the business completely. So it's just a measure of what's possible in the private sector. Yeah, so 2x EBITDA,
in 4 years.
dividend recap, fully repaid, and everything else is now kind of return.
So just what I've listening to both
So
you
just
and
on that. Now that you mentioned
We're
that,
competing.
Mervyn here on the other side, he's grown his profits 3 times over the last month. Just for the record.
Yeah, I think Naveen, can I make a comment?
Yeah, go.
Yeah, I think just to add to what Anton was saying, so I've had the privilege, I worked in the logistics sector as well, so I had a bursary from the South African Transport Services. So I've been able to look at the logistics sector and the electricity sector, and so firstly, just talking about economic growth, with our economic growth being subdued in that, the reality is that, so I'm an engineer, but I'm going to talk about economics now. Economics is about supply and demand, okay? And what happens is that if you've got a failing in Transnet or a failing in Eskom or, a lack of performance in some area, at the end of the day, the demand is fundamentally still there. So, getting to the point that Anton raised about that shortfall, it's like, it can be anything from 90 million tons or so, but it's still there. And likewise on the electricity side, that demand is still there. And I want to put this into perspective. So if you zoom out and you look at our country, there's fundamentally, over the next 10 years, the country's power generation capacity needs to about double from where we are today. And that's on the back of all the power stations also that need to be decommissioned. So at the end of the day, there's huge opportunities to increase generation capacity, and that has to come from somewhere. If it's not from Eskom, then it can be about, in terms of IPPs and that. And in saying that, now typically when you look at your legacy coal-fired plants and that, they're concentrated in a certain area. And when you start to migrate towards renewables, and they're scattered all around the country where there's no transmission grid. So fundamentally what's going to happen is there's going to be there's a massive need to invest into transmission infrastructure to connect these new renewable energy plants and that onto the national grid. And historically you would have a coal-fired power station that's like 2,000 megawatts of power, which is like 2 gigs, or the likes of Medupi and Kusile, they're just under 5 gigawatts of power, or 5,000 megawatts. Now, a renewable plant is much smaller. It's typically 100 megawatts or 150 megawatts. So you're going to have many renewable plants connected and this massive grid expansion. So at the end of the day, that demand is going to need an investment into capacity for transmission infrastructure, distribution infrastructure, and likewise the generation plant in that. So it opens up massive opportunities. So whilst the economy may not be growing optimally, the demand is there, and fundamentally somebody needs to fill that gap. That's the one thing I wanted to say, and exactly the same thing applies to rail. So what's happening in the country now from an infrastructure perspective? As Anton was saying, there's a mirror between Eskom and Transnet, and government's got this Operation Vulindlela, which is structural reforms to the economy to attract investment. And that goes across energy, logistics, water, communications, and a few other sectors, And the good thing is that those structural reforms are starting to mean that you've got rail on the one hand, where there's the separate infrastructure component that's being separated, and on the power side, you've got this transmission network where you've got now the National Transmission Company of South Africa being spun out of Eskom into a separate entity. So there's two separate transmission entities that enable, on the rail side, third-party access in terms of third-party companies operating their locomotives on historic Transnet infrastructure. Likewise, you've got the National Transmission Company that will be able to transmit power from alternate power generation companies. So a massive enablement of private sector investment.
Yeah, I'm just thinking on that note of enablement. I think from an investor perspective, as pension funds, it sounds, what I'm hearing, you're getting management teams that are more focused, they have skin in the game, and they're obsessed in achieving their growth outcomes and building their businesses. So I think, with these, call it, these opportunities we have within your businesses and the important role you do in filling the void, it's that I think the absence of it would be inflationary from an investor perspective, because there's capacity constraints and blockages in the system. So I think that's very encouraging and very appealing for investors. And I think with that, just if we could go to, we had a poll, just to have a look at one of the polls that we had, I think within that team. So it says, since 1999, the equity index has returned 20.4%. And over that same time period, how much has the Vuyo's AIM Ideas Managed Fund returned? Is everyone on their app? Or okay, let's just go by a show of hands. Who thinks it's been between A, B? Let's just get a show of hands for A. B? we got believers. C? And D? Give that man a bells. And the lady a bells. It's definitely 23.5%. Can we go to the next poll? So there we are. Likewise, with the Old Mutual Private Equity Fund 5. These are the businesses that the private equity team has invested in. Some are very familiar to you. The one that stands out at the moment is Holsport, which the team has just exited. And that's the business of Sportsman's Warehouse, Outdoor Warehouse, which you'd all be very familiar with. So against that backdrop, and of course Actom, against that backdrop, since 2020, what do you think the return has been? Wow. Okay. I think we're gonna call it there. Chumani, what's
It's the highest one.
So 53.
Yeah, it's probably in the mid, somewhere between 42.6 and 53.
That's a phenomenal outcome. So I think, you're getting a sense of the returns that are available outside of the listed market. And I think what's interesting is we've all been obsessed with the tech sector and the Mag 7. And I think of it where in South Africa, which listed companies have grown at 2x or 3x in the space of 4 years? And I think when you speak to your listed managers, my sense is they're talking to you about potential valuation opportunities where they're looking at buying companies that are cheaper. But in terms of the growth aspect, I think the conversations are quite tough. where the commodity sector, the two big parts of the JSEs, call it resources and then financials and industrials. And I suspect the conversations that they're having is that markets are tough. And we've got phenomenal uncertainty at the moment. South Africa's we have our challenges which are structural. But if you look at the US in the age of Trumponomics, the world is just uncertain. And I think these sort of strategies in these businesses gives you a sense of the phenomenal opportunities that we have in the unlisted space. And I hope that you got a better sense of listening to, let's just call it the MAG 2, the 2 times and 3 times. I think just looking at time, just to get a sense of if there's any questions or remarks you'd like to start off, Vuyo, and then we'll move on over to Chimani.
No, I think it's a message that's been spelled out earlier. More that I think from a transmission perspective, there's probably going to be kind of we're looking at a R1 trillion investment opportunity over the course of the next decade in transmission infrastructure investment. Similarly, on the rail front, you're looking at hundreds of billions of rands of potential investment. And the truth is, if you look at the listed market, there's very few counters out there that are going to give you access to these spaces. So I think if one has to think around how they get access to these markets, one has to look at the unlisted space and what's on offer. And that being said, I think the likes of ourselves have taken into consideration some of the pain points that pension funds have mentioned, pain points around liquidity, around fees, costs, etc. And I think if you kind of scratch the box a bit and have the conversation, you'll find that a lot of your underlying pension fund concerns have been addressed in various ways. And so participate in the big kind of infrastructure opportunity of the next decade and kind of have a chat with us.
Fantastic. Yourself,
Yeah,
Chimani?
I think for me, Devin, I think the message is, if you look at alternatives just globally, there is somewhere between 15 to 20% of people's portfolio. And in South Africa, we are in the low single digits. I think that's the key takeaway. Is I think the pension fund trustees just need to reflect on that. There's in a way a missed opportunity. Yes, there are some pain points around fees and liquidity, and but very simply in any portfolio, there's supposed to be a portion for alternatives, and within alternatives, private equity or infra. I think that's the key takeaway. From a private equity perspective, it's obviously not a scaled asset class. We're not going to be managing a $2 billion fund or whatever, certainly not in the South African context. But private companies do outperform listed firms, and they've got even a bigger opportunity to generate impact because, again, we are on the board. We're on the board, we're able to drive impact. I mean, that's what we didn't talk about yet. If Mervyn had to share some of his thoughts around that, it's just extremely powerful. So I think that's really the message for everyone is just to go dig deeper around alternative assets and opportunity if that's not what you're doing.
Wonderful. Thank you. I think we've run out of time, but I think on that theme of... actually, I said we're up for questions. Sorry. Are there any questions out there? Got to have at least one. There we go. Can we get that gentleman a mic, please?
Thank you. My name is Zibele Sokabo. I'm from the Motor Industry Retirement Fund. I'd like to take a lovely presentation, by the way. I gained a lot of insight from listening to the speakers. But I'd like to take it, I know we're talking about billions, and I would like to downgrade the discussion a bit. My question is directed to Mr. Kumani and Vuyo in the main. You know, Chair, in my previous life, I used to sit on a sitter board. Forget about the noise that is currently happening about sitters, but they are doing an excellent job. For instance, we've taken plus or minus 100 students to China to train with Alibaba and all. And recently we took other students to Egypt. The students that went to Egypt, they were there to learn skills in terms of appliance fixing and all of that. In addition to that, we've given them entrepreneurial courses. Now, one thing that is common with the students that went to China, 100 of them, all passed, is that when they come to South Africa, they don't have capital to start businesses. And the only two sources of funding institutions that they tend to get to go to is NEF and CIFA. Now, I want to find out what can the Old Mutual team do for those young entrepreneurs in order for them to build their businesses and to grow them to the levels of the companies that we see in front of us. Thanks, Chair.
Thank you.
Yeah, thank you, Zubeli, for the question. It's the right question. Look, I think I think it speaks to the impact that we make. And I think for us, if you look at our companies, a big part of them is, we obviously measure to what extent is our supply chains, are also impacting up and coming businesses, emerging businesses. And again, Mervyn can talk to you about that. So I think that is the one aspect we try to drive that to go deeper, even from a training perspective. Actom, Medhold, typically our companies have academies for skills transfer and bursaries, etc. And certainly also, if you look at the broader Old Mutual group, there's different stables where that is affected through directly.
Yeah, and maybe I was going to speak to directly what Tuman has mentioned. So obviously you're speaking to maybe startups, and obviously our big portfolio companies, the likes of TLG, etc., have preferential procurement in terms of suppliers, etc. But beyond that, capital for the actual businesses. Obviously, Old Mutual has Masisizane Fund, which is specifically dedicated towards funding up-and-coming entrepreneurs, and this is typically in kind of commercial pursuits, i.e. where there's a sales element. I think in further to that as well, you mentioned students who trained with Alibaba, for instance, and I'm assuming those are students who are going to be looking at kind of IT-related startup funding. And as part of that, the group has a business called Next 176, which is where kind of a lot of fintechs and other kind of AI-related startups are currently being funded. And in fact, I was with the CEO of Next 176 last week, and he was mentioning a number of things that they're doing around helping kind of entrepreneurs who are coming up with novel ideas to scale. I do think what's important, though, is what's the nature of these entrepreneurs, and I think obviously the fact that we're getting kind of a diverse range set from a complexion perspective, learning these skills, that grouping should hopefully. I think the impact will be to have a changing complexion for kind of IT entrepreneurs in the market.
Okay. Also, just to add to what Vuyo and Chumani said, and unfortunately, time was constrained, so we, couldn't comment earlier. But impact is something that we, as Actom, see as key to our business. And so, firstly, education. I mean, for me, is the foundation to the future of our country. And what we do as Actom, being an engineering company, we invest into maths and science programs into schools, and we've got tutors on our payroll that tutor to children in poorer schools from grade 8. Those children walk a path with us when they get to matric. If they qualify to go to university, we fund them. If they then go to they want to do a trade, they go into our training centers, Batseta Credit, and that's the kind of thing that we actively do. But beyond that, we have enterprise development initiatives as well, trying to develop suppliers into our supply chain, SMMEs and that's key for the sustainability.
Thank you very much for nice way to close, Mervyn. Thank you very much. And I think it's, just to wrap up, it's about investing with purpose, investing towards improving South Africa and the supply chain generation, and also having impact, which I think is phenomenal. It's been a great privilege to listen to your insights and learn more about your businesses. And I know that focus is a thing that's very important to you. So Anton's got to catch up with, he's got 2X, you've got 3X, so he's got some work to do. So I think we'd like to relieve them of that. Thank you for being so generous for your time. Thanks, Chumani and Vuyo. And thank you, everyone, for participating in our panel.